Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And let me tell you, the CLOROX company has a few interesting things to reveal in their latest quarterly report. Today we are diving deep into their financial results for the last few months of 2025. We will look at their sales, their profits, and what it all means for the future. So buckle up because these numbers tell a story. And hey, if you love getting these kinds of insights straight from the source, make sure you subscribe. We also have a Discord community link down in the description where we break down more corporate filings and talk about stock strategies. All right, let's get straight to it. CLOROX is a big name in household products from bleach to cat litter to grilling supplies. They operate in several segments: health and wellness, household lifestyle, and international. Looking at their earnings report for the 3 months ended December 2025, we see their net sales were about $1.67 billion. That is a slight dip of about 1% compared to the same time in 2024. For the 6-month period, sales dropped by a more significant 10%, going from $3.4 billion to $3.1 billion. This drop is partly because they had some big shipments at the end of 2024 related to a new technology system they are rolling out, and also the sale of one of their businesses. Their gross profit, which is what is left after the cost of making their products, also saw a dip. For the 3-month period it dropped by 2%, and for the 6-month period it fell by a hefty 15%. This means their products are costing them more to make, or they are selling them at lower prices, or a combination of both. Their gross margin, which shows how much they keep from each dollar of sales, also decreased. Now let's talk about expenses. Selling and administrative costs for the 3 months actually went down by 6% in dollars, but as a percentage of their sales, they went up. For the 6-month period, these costs also went down in dollars, but increased significantly as a percentage of sales. This suggests they are spending more to sell their products relative to how much they are selling. They are still investing heavily in advertising, which is something good companies do to support their brands. Interestingly, other income and expenses show a big swing. In the 3-month period of 2024, they actually had a lot of income, which largely came from insurance money related to a cyber attack. In 2025, they did not have that same income. So the numbers look worse this year as a result. All of this affects their bottom line. Diluted earnings per share, which is a key measure for investors, dropped by 16% for the 3-month period and by 18% for the 6-month period. This is not ideal for shareholders. Let's break down how each of their segments performed. The health and wellness segment saw a slight sales increase, but their profit dipped a bit due to higher manufacturing and logistics costs. The household segment saw sales and profits drop significantly, a tough quarter for them. The lifestyle segment also faced sales declines, but surprisingly their profit went up, mainly because they cut back on advertising, which can be a short-term fix. The international segment showed growth in sales and profit driven by strong performance in Latin America. Corporate and other includes things like corporate overhead and the business they divested. Their sales in this category dropped dramatically because they sold a business in 2024. However, their profit in this area actually improved, mostly due to cost cutting. A notable point is their reliance on Walmart. They still generate about 26% of their sales from Walmart, which is a big customer. While this shows a strong relationship, it also means they are quite dependent on one major retailer. Looking at the breakdown of sales within segments, we can see that cleaning products are their biggest category, making up about 33% of their sales, followed by health and wellness at 38%. These two combined form the core of their business. Now for liquidity, their cash flow from operations was pretty steady from 2024 to 2025. It is good that they are still generating cash from their day-to-day business. However, cash used in investing activities increased significantly. This is mainly because in 2024 they received money from selling off a business, and in 2025 they spent more on investments. Financing activities also show a change, with less cash being used in 2025 compared to 2024. This means they borrowed more money in 2025. As of the 31st of December 2025, CLOROX had more current liabilities than current assets. This is largely because they have a big payment due in January 2026 related to their Glad business venture. They are planning to pay for this with a mix of cash and loans. They also announced a major acquisition of Gojo Industries, the makers of Purell, for about $2.25 billion, which they plan to fund mostly with debt. Speaking of that Glad business venture, their agreement with P&G expired, and CLOROX is buying out P&G's 20% share for $476 million. This is a significant move to fully own a key part of their business. CLOROX has a strong credit rating, which is important for borrowing money. They have a large revolving credit line and are currently in compliance with all their loan agreements. They continue to buy back their own stock, which can sometimes be a good sign if the company believes its shares are undervalued. Now for my take on this report, CLOROX is navigating a challenging economic environment. Sales are down, profits are under pressure, and they are taking on more debt for significant acquisitions. The dip in gross profit suggests they are struggling with rising costs or pricing pressures. While their international segment is doing well, the performance in household and lifestyle segments is concerning. The large acquisition of Gojo signals a big bet on hygiene products, a segment that likely saw a boost during the pandemic, and they want to maintain that momentum. However, funding this largely with debt does add risk, especially if economic conditions worsen, or if they can't fully realize the expected benefits. They are clearly investing in their future with this acquisition and their ongoing technology transformation, but these moves require careful execution. Overall, CLOROX has strong brands and is a household name for a reason. They have a solid foundation, but they need to manage rising costs and successfully integrate these new ventures to turn around the declining profitability seen in some segments. It will be interesting to see how the Gojo acquisition plays out and if it can reignite growth and profitability. Alright, that is our breakdown of CLOROX's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.